We're not in a global financial panic right now. We may be heading for one. That we talked about that separately. We're not in one right now. We are in a recession. It looks the U.S. is definitely in a recession right now. We had 2 consecutive quarters of decline in GDP, first quarter, second quarter. Well, that's a recession. We'll see what third quarter is going to be, but it may be prolonged. It may get worse. Europe is in a recession, based on the latest data. Japan is in a recession. China looks like they're in a recession. They reported their most recent growth figures of 0.4% for the second quarter, not 4%, but 0.4%, versus compound growth of over 10% for about 30 years. So, and they lie. So if they're admitting 0.4, then I have to believe that's negative. So we're really looking at a global recession. Now, a recession or even a depression, which it may turn into, is not the same as a financial panic. You can have panics without recessions. We saw that in 1998, 1987. You can have recessions without panics. We saw that in 1990 and 2020. Sometimes they do go together. 2008 was an example of both, a severe recession and a severe financial panic. But I would keep those separate, because if we're not in a global financial panic, then we don't necessarily have dollar buying because of get me out of everything else. Although I want to come back to that. But we are in a recession. Now, the recession should damp down the inflation. It hasn't yet. Inflation's high. There's no question about it. We see it in the data. You see it at the gas pump. You see it at the store. But that may trend a lot lower very quickly, but not for good reasons. In other words, you say, well, what's the Fed doing about inflation? Well, they really can't do anything about it. The inflation is coming from the supply side. The inflation can come from probably a lot of places, but 2 places in particular, supply side and the demand side. Supply side inflation is when there are shortages, there are bottlenecks, there are supply chain dysfunction, people run out of stuff, there's not enough fertilizer, not enough water, not enough truck drivers, ports are clogged, you can't get the input A to make item B, so you got to shut down assembly line because you can't get titanium from Russia to build Boeing aircraft. But supply chains are breaking down in many different respects. And prices go up as a result. But that's not, but the other kind of inflation is called, and it's called cost push inflation. The other kind of inflation is demand pull inflation. This is when consumers change their behavior. They get it in their heads like, hey, prices are going up, they're getting out of control, I better go out and buy that thing, And this is what we lived through in the 1970s, and I remember very well. If you were going to buy a refrigerator, a new car, a dishwasher, whatever, you'd say to yourself, I better go buy it today, because if I wait 3 months, it's going to be higher. Or 6 months, it's going to be a lot higher. By the way, that is what happened between 1977 and 1981. In that 5-year period, the dollar lost over 50% of its purchasing power. A lot of people like to bang the table and say, since the creation of the Fed in 1913, the dollar has lost 95% of its purchasing power. Well, that's a true statement, but you don't need 110 years. We lost 50% in 5 years. Between 1977 and 1982. So inflation is insidious. It is a tax. It is a form of theft. But like the kid with the mother's wallet, if you keep the theft, in small little bites, but do it long enough, you can get the whole thing and no one will notice. So they say we want 2% because we want to be able to cut if we have to. But the real reason is we want to basically erode the value of the debt and erode the purchasing power of the dollar in ways that you don't notice. And they can be very patient, and that's how they do it. So what are they going to do? They're going to keep raising rates because they got to crush inflation. Jay Powell does not want to be remembered as the new Arthur Burns or William McChesney Martin. He wants to be remembered as, if anything, the new Paul Volcker. And that's what Volcker did. Leave aside whether that was really the problem, but that's what he did. So Powell is going to keep raising rates, and they may raise them 75 basis points in September, again in November, again in December, into 2023. The inflation peaked last June. That's a separate debate. Inflation is coming down. It's still too high. It's still way above the Fed's target, and we'll talk about that. But it has been coming down, but it's still high. you're in the death zone of interest rates, which is going to cause the economy to crash.